This is a revision video for the 2016 club account question, which is a 60-mark question. We're just going to look through the question here very quickly to refresh our memories on what it entails. Up at the top sentence, you have all of the assets and liabilities at the start of the year. Then you have some money in on the debit side of your bank account or receipts account and money out on the credit side. And then you have at the end of the year some further adjustments. In particular, we'll look at adjustment number 5, which is all to do with subscriptions. And working 8 down here is about bar debtors and bar creditors, which we'll look at. Because it's a 60-mark question, you only have to do the accumulated fund and the income and expenditure account. In a 100-mark question, of course, you would also have to do a balance sheet. There is a little bit of theory, which we'll look at towards the end of the video. So with club accounts, the very first two workings that I always do is we're going to do the bar trading account. Now we have to take into account that we have bar debtors and creditors, which will affect our bar receipts and our bar purchases at the beginning and the end of the year. And then the second working that we do is the subscriptions. And that's quite a hefty working because, as I said, working 5 down here, and also there is some life membership and there's a levy to be dealt with and all that. So let's get those two big ones out of the way and then we can look back at the question then. So I've just highlighted the two significant workings here. So as this is a revision video, I'm going to go through them reasonably quickly. You take your bar receipts from the debit side of the bank account, 76,300. However, we need to refine those because we have debtors at the start of the year and we have to subtract that because if people owed us money on the first day of January, it was for sales last year in 2014. And then we have debtors at the end of the year, which we need to add on because if somebody owes you money at the end of the year, that was for something which was sold this year. So when you do that, you get your 76,445, and that is the number that goes into your bar sales in your bar trading account. And you do the same for purchases. You take this and you take away creditors at the start, add on creditors at the end, and you get this purchases number here. And this is the number that goes into your bar trading account here. From the top sentence of the question, you have your opening stock. And from working number 1, at the bottom, you have your closing stock of the bar, which is 16,900. So therefore, when you do that process or procedure there, you're going to end up with a gross profit on the bar of 55,515. And that is an income in your profit and loss account. The second working is to do with subscriptions. You take the original number from the bank account. It's 102,900. However, you have to add on an amount prepaid at the start of the year. And then you go to this working number 5 where you have a significant amount of information. I'm actually going to go back in here for a moment just to talk to you about it. It says subscriptions include 2 life memberships, bringing the total life membership up to 10. Now that's 10 people. So if 2 of them bring the total up to 10, previous to those 2, there was 8 people who had paid life membership. Those 8 people equated to life membership at the start of the year is 40,000. So from that we can deduce that life membership is actually 5,000 per person. And of course, as I said again, there were 2 of them. So that's how I get this 10,000 euro. That is 2 5,000 euro payments. Then we have subscriptions prepaid at the end of 800. It says subscriptions for the year 2016, which is next year. And then it says subscriptions also include a levy for this year of 50 euro on all 500 members, which is 25,000. We need to take that out because it should not be in subscriptions. We also take out the 20 people who didn't pay last year's levy. That's a levy due at the end of the year, and that's a current asset, an income due. You do all of this maneuvering here, and you're going to get your actual subscriptions, income and expenditure subscriptions, and that is an income in there. Income prepaid, this is a current liability in the balance sheet, and this is an AFL, an accumulated fund liability at the start of the year. Now, the levy and the life membership need to be treated slightly different. This 10,000, well, you need to go over here and you need to say, okay, we had life membership at the start of the year of 40. And then if we add on the 10 we collected this year, that gives you 50. And then working number 6 in the question says the club is deciding to write the life membership off or to be credited to income over a 10-year period. So 1/10 of this account of 50,000 we're going to move into incomes every year. We're going to drip feed it in. So 1/10 is obviously 5,000, and that goes to incomes, and the remaining 45,000 stays in the life membership account at the end of the year, and that's in the finance by section of the balance sheet. We also have a levy at the start of the year of 50,000, and so therefore if we add, and that's an accumulated fund liability or a capital income. And if we add on this year's levy of 25, then of course we will have 75 at the end of the year, which is a finance by. So in there we have a lot of work done in working number 1 and working number 2. Following on from that, you go back to the question and you begin to look for other workings that need to be done. So in the top sentence, is there anything else which is due or prepaid? Well, I see wages due here, which will lead us to a sundry expenses working because we don't have a specific wages working. And I see investment interest due, which will lead us to an investment interest working. Here's the money we receive on the investment, and there is some due at the start of the year and at the end of the year. We'll look at those two now. So let's look at the investment income working first. We receive 2,400. You're told in the question that's an interest on a 4% investment. You're not told if that's the full amount entitled. You take away how much was due for last year, and you add on how much is still due for this year, which is in working number 2 at the end of the year. And that means that actually the investment interest for the year, the actual income, is 2,500. And that is an income. This is an income due at the end and an income due at the beginning. Accumulated fund and current asset. Now, we have to do another little bit of maneuvering here because you do have what we call a hidden asset here. If 2,500 is equal to 4%, then how much was the actual investment? We must have money invested. Well, if you divide that by 4 and multiply it back by 100, you'll find that the investment is actually 62,500. And that is that is a fixed asset or a financial fixed asset. And that's an asset at the start of the year in the accumulated fund and at the end of the year in the fixed assets if we were doing a balance sheet. So that's a hidden asset, worth a good few marks because you had to find it. Here's our sundry expenses, and we just take away an amount due at the start of the year because it was for last year, and you get your expense, your profit and loss figure for sundry expenses is 122,850. Nice and straightforward. Let's go back to the question and see what else needs our attention. Well, that's everything done in the top sentence now, anything which is due or prepaid. If we look at the bottom workings, well, we've done a good few of these as well, but we do need to look at the catering, and we do need to look at depreciation. And once we do that, I think we'll have most of them covered. So let's look at those ones here. Catering, we do have catering receipts. You just take away catering purchases, but before you can do that, you need to take off your closing stock because you do have a closing stock of catering. So therefore, 4,800 take away closing stock. Actually, the cost of sales for catering is 4,200, leaving us with a profit of 2,300. How do we do depreciation? Well, we have depreciation on the clubhouse of 2%. It's just 2% of 650,000, 13,000. And depreciation of equipment is 20% of the final figure. We had 24 at the start, and during the year we bought 18. So that gives you 42,000 at 20%, which is 8,400. Both of these are profit and loss expenses. Now, what's left for us to tidy up now? Well, if we go back to the question one more time there, we will see at the bottom, well, we have everything dealt with now here. Number 1, 2, 3, 4, 5, 6. The only thing that is not dealt with is it says the dishonored check was subsequently not recovered and written off as a bad debt. Well, if we look at that, there's a check which was taken out of our bank account of €80. We don't need to affect the bank account because, as we can see, it has already been done. We just need to know that that is a bad debt of €80. We also have competition receipts and competition prizes, which we need to net together. And we do have this bank loan with 15 months interest at 8%. We're not told how much the actual loan itself is. We'll have to do a bit of work on that. Let's look at that for a moment. So here's the dishonor check note. It's just a bad debt of €80. It's a profit and loss expense. Here's the competition receipts less competition prizes gives you a profit or an income of 3,500. Now the loan, let's have a little look at this. 33,000 is the repayment. We know that that is 110%. How do we know it's 110% of the loan? Well, we know that it is the loan plus the interest. The interest is 8% per annum, but for 1.25 years or 15 months. So what is 8% by 1.25 or by 15 over 12? That's actually 10%. And so therefore we know that this is 110. If you divide that by 110 and multiply it by 100, you'll find out how much the actual loan is. Meaning the interest, the 15 months interest equates to €3,000. Now if you want to divide that by 15 to get 1 month, and you multiply it by 12 for this year, and that's an expense, and you multiply it by 3 for last year, and that's an accumulated fund liability. We owed that at the start of the year, as indeed we owed the actual loan as well, so that's also an accumulated fund liability. That's all of the workings done. So we'll have a quick look at the question, guys, or the answer, sorry. The accumulated fund, the structure here is very familiar to us. We're going to add up all of our assets, take away all of our liabilities. They're all in the top sentence, except for the following notable ones. The hidden investment, which we had to find, the levy due from the subscriptions working, and the investment income due from, well, that actually is in the top sentence, but we just need to know. And then down here, well, we need to pay particular heed here to the loan and the loan interest, which we just did in that last working. And also slightly tricky here, you start with an opening bank overdraft. So therefore that's a liability at the start of the year of 8,500. Enter in all of your assets, all of your liabilities, take one from the other. The accumulated fund is 609,155. That's how much the club is worth on the 1st of January. Here's our income and expenditure account. You put in your bar profit, which was from working 1, subscriptions from working 2. Those are the heavy ones for points. Investment interest was from a working, as was life membership, catering profit, competition profit. And then directly from the question, we sought out and we got entrance fees and we got annual sponsorship. You do not put in the equipment grant because that is a capital income, a one-off income, so that does not go in. And then from the credit side, from the working, sundry expenses and loan interest and the 2 depreciations and the bad debt. And then you go back and you see, was there anything else directly from the question? Well, everything else has been dealt with here. You don't put in the balance and you don't put in equipment as it's a capital expenditure and it will go into the fixed assets. And everything else is pretty much dealt with. Again, you don't put in the balance. So we return and we say that those are all of your expenses. Take away from there. The club is making a surplus of 10,985. The theory says explain or distinguish between a levy and life membership and explain how they're treated in the accounts. Well, a levy is a payment made to a club by its members to fund a special capital project like a clubhouse extension, and it must be used for that purpose. It's a capital receipt and it's credited into the levy reserve fund in the finance by section, treated as a long-term liability. Whereas life membership is a fee that entitles a member to use the facilities for the rest of their life. It's also treated as a long-term liability in the balance sheet, and it can be written off or written down to income over a stated number of years, 10 years, for example, in this question. That's our 2016 club account 60-mark question.